Okay, let's unpack this. We're diving into the market action from Wednesday, November 5th, 2025. And it really showed this deep divide, didn't it?
Yeah.
This clash between macro hope and micro reality.
It really did. A huge collision. You had this fleeting optimism from, well, frankly, scarce economic data.
Right.
And then the sort of brutal micro view skepticism about valuations just hitting
It
hard.
was a classic tug of war.
Uh,
The market spent the day trying to climb out of Tuesday's big sell-off.
yeah, trying desperately.
But those gains, poof, gone right after the bell.
Exactly. And what's fascinating, really, is the pressure cooker environment. You've got this historic government shutdown, right? 36 days now, a total data blackout.
The longest ever.
The longest. And on the other hand, this pervasive fear, almost paranoia, about an AI bubble. So every little piece of data gets this extreme reaction.
So our goal today is really to synthesize this. How did the market manage that fragile rebound during the day? Why did it evaporate overnight? And crucially, how is this, historic data vacuum changing the game for investors, especially in high growth?
Let's start with the rebound itself.
Okay, yeah, the day session, we saw indices close positive, trying to recover from that sharp tech-led drop on Tuesday. The S&P 500 gained 0.78%, the Dow up 0.62%, and NASDAQ led up over 1%. Looked like a recovery.
It looked like it on the surface, but, you scratch beneath that surface, and the foundation was shaky, really shaky. This whole upswing, it was almost entirely driven by one single report.
The ADP number.
The ADP Private Employment Report, yeah. It showed, what was it, 42,000 jobs added in October, which, okay, beat the forecast of 26,000, a nice beat.
And this just screams market desperation, doesn't it? Because the official BLS report, the quote-unquote gold standard jobs report,
Yeah.
it's indefinitely delayed by the shutdown. So investors had literally nothing else. They put massive weight on a secondary report just because it was the only macro headline out there.
Precisely. And we know, historically, ADP doesn't always line up that well with the official BLS numbers. It's a substitute, sure, but not a reliable replacement.
Mm.
And even worse, if you looked inside the ADP report, the details were, well, concerning. It was really split. Large companies, they added 74,000 jobs,
Yep.
okay? But small businesses, they lost 15,000 jobs, still feeling the pain.
So that weakness was just ignored by the bulls.
Pretty much. Ignored by the headline chasers, it suggests the rebound was built on, an easily digestible number, not actual economic strength.
Okay, so that split, that positive headline versus the kind of ugly details, that sets up the main conflict. Indices rise on this brief macro hope.
Fleeting hope.
But the market's real worry, the dominant concern, was still there. Stretched tech valuations. The S&P 500's forward PE, people were citing it at 23 times earnings. That's way above the 5-year average of 20.
Yeah, think about that jump, 20x to 23x. That's like a 15% premium you're paying for future earnings.
Right.
Pretty aggressive pricing, especially when the economy is, like we said, flying blind without official data.
Hey.
And you saw that tension during the day. Big tech names, NVIDIA, Alphabet, they bounced back.
Yeah, they led the rebound.
But these were the exact same stocks that got hammered the day before. So the underlying valuation concern, it wasn't fixed. It was just sort of tabled for a few hours.
Okay, help me square this because it feels a bit contradictory. You have NVIDIA and Alphabet up strongly, suggesting faith in AI. But then companies actually making money from AI or in that supply chain, they got punished brutally when they reported earnings. Is that like a rotation within tech or just market confusion?
I wouldn't call it confusion, more like financial rigor demanding proof.
Yep.
The stocks that reported during the day showed that fear was still very much alive. Look at AMD, Advanced Micro Devices.
AMD fell.
Fell 3%. And this was despite reporting record results the night before. Record results. Booming AI sales apparently weren't enough to justify that high valuation.
Wow, not enough.
Nope. Expectations were just too high.
And it wasn't just the chip makers getting hit, was it?
Oh, not at all. Look at Pinterest, PINS. Plummeted 22%. Missed on revenue, missed on earnings.
Ouch.
And Supermicrocomputer, SMCI, key hardware name, sank 9.5% after missing estimates, too. This isn't just one sector. It suggests investors are losing faith in speculative growth across the board. They want proof now. Margin perfection, real profits, not just, a good story.
So the day ends positive on the indices, but it sounds like the bears were just waiting in the wings. Where did that anxiety pop up next?
Immediately, as soon as the regular session closed, after hours trading, futures just turned lower straight away, erased all that ADP optimism.
Really?
Yep, NASDAQ 100 futures down 0.6% by 8 p.m. Eastern. The market just snapped right back to that core skepticism. Proved to me these high valuations are justified.
Okay, let's zoom in on Qualcomm then.
Okay.
QCOM. because that reaction seems to really hammer home the point. They delivered what everyone would call a gold standard quarter.
Absolutely textbook.
A beat and raise. Beat on EPS, beat on revenue, gave bullish guidance for Q1, better than expected, everything you want.
Everything.
And the stock still fell 1.7% in extended trading. Fell.
Yeah. And this isn't just normal profit-taking. This is a big signal. It's a classic sell the news event. It tells you the institutions that push the stock up before the report use the good news itself as an opportunity to get out, to de-risk.
So all the good news was more than priced in already.
More than priced in. The market is basically saying, thanks for the good quarter, now give me my money back. It shows the bar for success in tech right now, especially high valuation tech, is just impossibly high.
And this wasn't just Qualcomm, right? We saw Apple and APP drop after hours too. Why is that significant?
Well, Apploven is kind of a bellwether for mobile ads, digital monetization. Seeing it fall too confirms the skepticism isn't just about AI chips, it's broader. It's about the whole digital ecosystem that fuels growth. The selling pressure is widespread. But we should mention a contrast. Fortinet FTNT, cybersecurity name.
Okay.
They actually did okay, reported a beat, and importantly, strong billings growth, 14%. That countered this negative story that had been weighing on cyber stocks. Billings growth, that poised to future contracts, future revenue.
So the market rewarded that.
It seems so. It suggests the market isn't selling all tech blindly. It's being selective. It's punishing the frothiest AI names, the semiconductor darlings maybe, but rewarding companies outside that hype that show real financial rigor, like strong future bookings.
That selectivity just raises the stakes even higher for the next batch of earnings, doesn't it? Especially after Qualcomm.
Absolutely.
You look at ARM Holdings, ARM, trading at, 84 times forward earnings? Insane multiple.
Yeah.
And the options market is pricing in a massive 10.7% move on earnings.
Huge implied move.
Or Robinhood.
Yeah.
8hood. Needs to hit a 200% jump in year-over-year EPS. It feels like these stocks are now being measured against that Qualcomm reaction.
Yeah.
And the market's trigger finger is itchy.
Very itchy. The pressure is immense.
And all of this volatility, this nervousness, it's happening under this giant shadow.
Yeah.
The government shutdown. 36 days. Longest in U.S. history.
That context is absolutely critical right now. People talk about the economic cost, maybe $7 billion lost output, sure. But for the market, the big issue is the systemic risk. No data.
Right.
The shutdown means no critical government data releases. The Federal Reserve is essentially flying blind. How can they make informed decisions on interest rates, on inflation, on jobs without the actual data? They can't.
So it's not just inconvenient, it's actively messing with market mechanics. It suppresses volatility by removing the big macro reports like the jobs number.
Exactly.
But then it forces everyone to overreact to the minor stuff like ADP because it's all they have. The market becomes myopic, tunnel visioned.
Well said. Myopic is the perfect word. And here's a really important warning for listeners. You'll probably still see financial news sites listing the official BLS jobs report for Friday, November 7th.
Oh, right.
That is wrong. It's incorrect. The report is delayed because of the shutdown. Don't be misled. The only major macro point this week that is coming out is the University of Michigan Consumer Sentiment Survey. And given this data vacuum,
that sentiment number is going to get huge attention.
Huge oversized attention. Expect the same kind of leverage reaction we saw with ADP.
Okay, so let's try to tie this all together. What's the synthesis here?
I think the dynamic is crystal clear now. The market is prioritizing short-term proof, financial rigor over long-term stories. Without reliable government data, without that official strong economy narrative to backstop high valuation.
Right, no safety net.
The market is just selling the micro-reality of earnings reports. Any disappointment or even just meeting expectations like Qualcomm, it gets sold. Macro hope gets overridden by micro-skepticism fast. The QCM reaction proved that definitively.
And this earnings-driven roller coaster, it's set to continue. We've got Moderna before the open tomorrow, Microchip Technology after the close. They're all facing that incredibly high bar set by Qualcomm. A beat might just not be good enough anymore.
That's the key takeaway. The data vacuum has made the market hyper-selective, hyper-volatile around individual earnings. The message from Qualcomm, from Apploven, loud and clear, good news is being treated as an exit round.
Yeah. So you've seen how strong performance, a beat and raise even, is getting sold almost immediately, an impossibly high bar for growth stocks. And we have zero official data to prove the underlying economy can even support these kinds of valuations. Given this intense skepticism, this readiness to sell, what specific data point, macro or micro, could possibly turn this sentiment around right now? What could satisfy a market that seems actively looking for excuses to take profits? Something for you to think about as we all navigate this unprecedented data blackout.